Hello everyone, and welcome to our discussion of methods to record payroll in Design Manager. My name is Brad, and I'll be hosting the demonstration today. If you have any questions, feel free to enter them into the questions pane on your GoToWebinar panel. If the question is outside of the scope of today's discussion, please email them to support@designmanager.com. Lastly, if you miss a portion of the webinar or want to review any of our past discussions, go to our Help Center at knowledge.designmanager.com. Click on the Webinars menu and go down to Recorded Webinars, and then you can view any of our past discussions at your leisure. Today we'll be discussing various ways to record payroll in Design Manager and even generate payroll checks if necessary. As usual, we'll be doing examples in both Design Manager and Design Manager Professional, but we're going to focus mainly on Design Manager, as entering payroll is nearly identical between the two platforms. Okay. First off, Design Manager does not calculate deductions, withholdings, taxes, etc. This information must be obtained from a third-party payroll company such as Paychex or Heartland, or you or your accounting professional need to manually calculate such deductions themselves. We do not handle any of those types of calculations. Okay, with that disclaimer out of the way, let's review two of the main ways of entering in or recording payroll in Design Manager. And we'll begin with what we call a payroll entry. A payroll entry is a specialized operating expense, and it's utilized only to record payroll information and ultimately generate checks for employees in Design Manager. This is an entirely manual method, but it does alleviate the need for a payroll processing company, but also does require the most initial configuration and involves the most data entry per pay period. When processing payroll yourself, you will be recording the salary of the employees as a company expense, while also withholding any federal, state, local funds for the employees, which you will in turn pay the appropriate authority upon the payroll period ending. So let's review some of the areas that need to be configured prior to being able to use a payroll entry. First, let's look at our chart of accounts, which we can access by going to Glossaries and Accounts. And for our professional users, in Pro, you would go to your Accounting tab, and then under your General Ledger frame, click on your Accounts button, and you can see the two windows are nearly identical at this point. So let's review some of the accounts that are necessary to use the payroll entry. First, we're going to need a salary expense account to hold the funds that we're paying all of our employees, and we're also going to need the appropriate withholding liability accounts that are necessary for your location in the country to record your taxes properly. So under our expense accounts, which are generally in the 60,000 range, we can see my account 61,000 is my expense account for salaries. My withholding accounts are, as I said, liability accounts, and they're generally in the 20,000 range. And we can see I have accounts created for federal income tax, FICA, Medicare, etc. Let's take a look at one of these accounts. We'll use Medicare tax withheld, and notice that they should be designated as a payroll account. And this will help our configuration in our next phase under the employees, which we'll see very shortly. Also, if thinking in a grander scheme about payroll in general, you're going to have expense accounts for unemployment, FICA, etc. as expense accounts. We can see I have a few listed here for FICA and unemployment expenses. Now, these are not used in employees' payroll. This is to use to record the company's tax burden simply by providing payroll for our employees. So these are company expense accounts that we have to pay for our payroll taxes. And notice, these should not be designated as a payroll account, and I'll show you the benefit of doing so shortly as well. Ultimately, remember, you're going to be remitting the funds that you've withheld from your employees along with your company payroll taxes, and you're going to provide those to all of the appropriate tax authorities. Let's look at the second area that requires some configuration for our payroll entry. And as I alluded to, that's the employee themselves, which again is accessed under glossaries, employees. And in professional, you would go to your project tab, and under lists and glossaries, you can see your employees. And again, at this point, the windows are very similar. Let's use Ashley Brandon as an example. If we edit her employee record, we can see there's a payroll tab. And by selecting it, we already see we have a series of accounts associated here. And this is very convenient as we can enter in the salary along with all of our withholding accounts. That's going to make our payroll entry processing even easier. And in this case, Ashley is a salaried employee, so these numbers wouldn't change very much except in unusual circumstances. So once we enter our information here, we'll be able to use it quite rapidly when we truly generate a payroll entry. But notice, our salary is entered as a positive amount, while the liabilities are all entered as negative amounts. Think about it as we're providing Ashley with her salary, yet we're taking back money to hold for her so we can pay her taxes for her. And the net result would be the salaries less all of our withheld funds that we can see our net pay at the bottom listed as well. And we can even add or change entries here. If Ashley got an increase in salary, I can certainly just edit my record and increase her salary amount. And appropriately, each of her withheld accounts would increase as well. And we can also add entries here as well. So I might have a state withholding account that I need added. I simply click on the Add button as indicated by the green plus sign. Use my glossary search, and I can select my state income tax withheld. And let's imagine that that's $50 per pay period for Ashley. And there we go. So of course you can change the salary amount and all of the withholding amounts as well. A handy checks and balances here is I can only add accounts that are designated as payroll accounts. Remember, we saw on our account glossary that there's a payroll option on the account itself. Design Manager prevents us from adding any accounts that are not set to that payroll designation. Let's go ahead and see how that happens. Go back to our Add button, and let's say I'm going to add my FICA account, and rather than using the appropriate liability account, I use the expense account. Again, this is the company expense account, not the employee's portion. If I try to enter a value here, Design Manager warns me that the account must be designated as a payroll account. So there is some checks and balances in there if we set up our accounts conscientiously. Now that's Ashley's entry because she's a salaried employee. But if we look at Patrick, for example, on his payroll tab, since he's an hourly employee, each of these would change. So all I did was put in the appropriate accounts that I'm going to fill in, and when I truly input my payroll entry, I'll have to manually type it predicated upon the hours that Patrick worked in that period. Okay, so that's the configuration really necessary for our payroll entries. Let's go ahead and see how we actually process one. And in Design Manager, of course, any such activity would go under our Documents and Accounting window. I would switch it to my vendor view. Remember, vendors sort of include employees in Design Manager as well. And we can even see Ashley listed as an employee. And notice, if we expand our Ashley's employee record, we can see there's a folder for purchase and work orders, but expenses and payroll entries, which is different than if we look at Bungalow 5, they have operating expenses and miscellaneous bills. So Ashley, being an employee, has a specialized folder for her expenses and payroll entries. In Professional Platform, to create a payroll entry, you would go to your Accounting tab, and under Accounts Payable, you would select your bills and invoices, the Add button, and on your Type menu, select Payroll Entry. And at this point, you'll see how it's exactly the same in Design Manager as well. So to create a new payroll entry, we can simply click the Expense or Bill button, or we could right-click and do New Invoice. And that brings us to our payroll entry window. And lo and behold, most of the information is done for us. Again, Ashley being a salaried employee, since we have configured her properly on the employee window, her salary is listed along with all of the appropriate deductions. So all we have to fill out is the rest of the information. We have her listed as the employee. The period will be a description of the payment or the period for which the payroll check is being generated. And usually it might be something simple as the period itself. And the period is required, by the way, so you have to have something entered in there. Now this is the check date. When entered, it'll automatically populate the due date as well. But I like to point out a feature here. This is different than other types of vendor payments, such as vendor deposits or vendor invoices or operating expenses, in that whatever is entered in as the check date here is the date that will actually appear on the physical check itself, regardless of the day that we create it. Now, if that sounds confusing, I'll make sure that I point it out when we go to generate the check itself. But whatever we type in here is what will appear on the check for the employee payroll. So we could put in 7/15, and upon tabbing out, notice the due date does get populated. Transaction description, well, that's going to be optional, as many of you know. I am a big advocate of them, as I feel that they are very valuable tools when researching information. And it may be very similar to the period, or something perhaps like brand 7/1 through 7/15, or something to that effect. All we have to do now is select our Pay With method. It defaults to pay with a check. It would be very unusual to be paying an individual with a credit card or other payment type. And in the same vein, notice there is no hand check wire transfer button available on the payroll entry as there is on the vendor deposit window or vendor invoice window. Design Manager is essentially directing us to generate payroll checks. We can review our salary and all of our withholding accounts. If we need to make any changes, we can do so simply by editing or removing with the delete button. Or we can even add another distribution or withholding account. Let's say that there's a quarterly municipal withholding that we need to enter for this particular period. So we just click on our Add button, use our account search, go down to our liability accounts, and there's a quarterly local services tax, which is just fine. And let's say that's a $10 fee. And there we go. So again, you have full control over properly generating your payroll checks. And if we click OK, we can see our payroll entry right in the appropriate month under 7/2016 in this example. You can see the period being listed. In parentheses is the transaction description, the check date, and the net amount. Now let's go ahead and actually generate a check for Ashley. So in that case, we'd hop off Documents and Accounting, and we'd go to our Pay Bills and Checkbook. And for our professional users, you of course would simply move off of Pay Bills and Invoices to Payments and Checks. And there we go. You can see the windows are similar from this point on. There's our payroll entry for Ashley waiting for us to generate a check. Simply select or tag and click the Checks button. That brings us to our Check Run window. Now if I have multiple checking accounts, I want to select the appropriate one on my checking account window. I've got a singular account, so it's quite easy. And when I select my account, we can see my check 10,009 is being created for Ashley. I'm going to point out here, notice that this check date on this window says 7/26/16. yet we entered the date of 7/15 on both our check date and due date. As I said before, it's always the date on the payroll entry that is important in the payroll check itself. So if we click our Print Post button and OK our print checks, we can see our payroll check. I want to point out a few things. First, like I said, notice that the check date is the 7/15 date that we entered. It does not matter what we entered in on our check run window, which makes the payroll entry a bit special in that regard. Secondly, our stubs are different. We can see our salary with all of the appropriate withholding figures and the net pay. And conveniently, we can see our year-to-date figures here as well. Besides that, the check is identical to our other NELCO forms. And all we have to do is physically print it onto our check. Once that's completed successfully, just close, accept to process. And then we can see our check listed in our checkbook, reducing our balance due on our account appropriately. And that shows us our payroll entry method. Yes, there is a degree of configuration necessary, and it certainly would require the most data entry, particularly calculating all the appropriate withholding amounts and being on top of any special fees or taxes that are due throughout the year. Our second method is going to involve the use of journal entries. And we can use a journal entry to record the necessary fiscal transactions in Design Manager, particularly when using an outside source, again, such as Paychex, Heartland, or your accounting firm, or another accounting program that's actually processing the payroll checks. We simply want to enter in the effect of those checks on our financials into Design Manager. Now, I'm going to assume that you know how to make a journal entry in our discussion today. If you want a little additional information on journal entries in general, again, you can go to our Help Center at knowledge.designmanager.com, go under the webinars, recorded webinars, and you can see we have an entire discussion just on journal entries themselves. Okay. Now in the journal entry method, all we really need to have configured is the accounts themselves. So let's take a look. Let's go back to our account glossary and point out the necessary accounts to make our journal entry possible. First of which being a cash account. We're going to need an account in Design Manager that represents the account from which the payroll provider is removing the funds. In other words, this is going to be the checking or savings account or operating account with your banking institution. And of course, that would be an asset bank checking account. As we saw before, we're going to at least need to have our salaries expense account. This is going to be an account that is going to hold the total amount paid to the employees. Now, it's not necessary to have an account for each employee. That just becomes a bit redundant. But some accounting professionals do prefer if you break out salaries into officer salaries or hourly salaries, etc. Now, I, however, like to keep my records as simple yet as accurate as possible, so I'm going to maintain that figure into a single salary expense account. We're going to need our payroll tax accounts, and in this case, we can have one payroll tax account or many. And these are the account or accounts that are going to hold all of those business-related payroll expenses. And again, you can subdivide them into the appropriate areas, FICA, unemployment, etc. Or you could have a singular account just for payroll taxes. Because when you're using an outside payroll provider, all of the forms that they provide, you're going to have all of that information for the various tax authorities that are being paid. So having that involved in Design Manager is not necessary. Another account that you may have would be a 401k matching account. If your company has a 401k program and your company even provides a matching amount, that would be considered a business expense as well, and that would need to be separated from your payroll taxes, as there are various implications that your accountant is going to want to see at the end of the year. Lastly, and another account that may commonly occur would be a health insurance liability contribution. So if your employees contribute to their health insurance, and that comes directly out of their paychecks, you want to record that amount into a liability account, as we can see here. As your company's ultimately going to use those funds, along with any amount that the company provides as insurance, as an expense when you ultimately go to pay your health insurance premiums. So we can see I have a health insurance withholding account as well. And those are really all of the accounts you would ever need to use the journal entry method. The real benefit of this method is we don't need to worry about employee tax withholdings at all of our liability accounts here, because the payroll company simply deducts what they provide as a singular check to the employees, and they're going to submit all those funds for us. So that's really one of the benefits of having a payroll processing company handle all of the payroll for you. Now, let's take a look at how the various methods of journal entries that we could use to record our payroll information. Go back to our Documents in Accounting. We'll go under Journal Entries. Let's go into our Journal Entry folder. Now we can see I have a few different series of journal entries. Now first, we could use a series of journal entries to represent a single pay period. We could have a single journal entry for representing each employee's paycheck. Let's look under our March, and you can see I've got a journal entry for each of my employees. And if we look at employee number 1's journal entry, we can see that I've reduced or credited my checking account, and then I've appropriately increased my salary account, and I'm breaking out all of my various expense accounts and even the 401k matching. So this method, the benefit here is where I'm making every journal entry match precisely what the payroll company or other software reflects. And I can really see the burden of each employee upon our expenses within the company. The downside of this method is it's labor intensive. You're going to have a journal entry for every employee plus all of those accounts. So you can simplify it a little bit. Again, with multiple journal entries, you see one again for each of our employees, but if we edit employee 1's payroll journal entry in our April month, now I've combined all of those expense accounts into my singular payroll taxes account. Remember, any reputable payroll processing company is going to have reams and reams of information of all of the various fiscal activities and all of the various payments they make to the tax authorities. So I can simply go to that documentation to provide to my accounting professional at the end of the year. All I need to know is the total amount of taxes I'm paying as a company expense, and it really simplifies the journal entry to a great degree. And the benefit here, I can still see the effect of each employee on my company as a whole, but the downside is I'm still making individual journal entries for each employee. If I have 15 employees, that could be a little bit redundant. So that brings us to our final method. In this method, I'm going to make a single journal entry to represent the entire payroll for the period. And if we look at my entry in May, you can see I have a single journal entry that has my entire amount deducted from my checking account and the appropriate salaries expense, my business payroll taxes, and the total amount of 401k matching that I provided for the entire period. So one journal entry representing the entire effect of processing the payroll for the first period in May. Now, if you have a payroll processing company, and we're going to use Paychex as one of our preferred payroll processing as an example, they should be able to provide you with what's called a cash requirements report or something to its equivalent. And all the information we need to make our journal entry is included upon here. So let's take a look. Very first thing we can see is the EFT, with the electronic funds transfer. In other words, how much is being removed on the payroll period. So this is the total effect on our cash of $23,000. That $23,000 coming out of our bank account is due to several different areas. We can see $300 that we matched as the employer. We also have all of our liabilities being withheld and the salaries themselves. Now, how do we get the salary figure from here? Because if we look at our journal entry, all we need is the amount coming out, which we know is $23,000. We have the payroll taxes. That's our employer liabilities. We don't even care about the employee withholding. That's between the payroll company and the employees. This is what reflects our business. So I've got the total amount coming out, the total payroll liability from our company, and lastly, our employer matching amount. So we have our amount coming out of our cash, our total payroll taxes, our 401k matching. Now we just need the salary. Well, we can easily calculate that as well. The salaries for the employees is going to be the total amount taken out less our taxes and less our 401k matching amount. And as you can see down here, I have the $23,000 of our cash withdrawn, less what we're paying in taxes, less what we're contributing for the 401k matching, and that figure becomes our salary amount. A very simple calculation there. So to record that, we go ahead, make a new journal entry, payroll 07A or 1 for the first period. I like to put in the date that it gets withdrawn. Period. Oops. And then our accounts. So we'd hit the add button. First thing I like to do is put in my checking account, and that's going to be a credit or a reduction of $23,000. I can use my OK Add button and put in the rest. So first we're going to have our salaries, which we're going to debit or increase as we want our expense account to go up, and this was, as we calculated, $21,080. OK Add again, and we can put in our 401k matching, which was $300 as a debit. Again, that's going to increase on the income statement. OK Add a final time, and we can put in our single payroll taxes at $16.20. And notice as we're entering all of those in, our net debits and credits goes down to 0, indicating that our journal entry is balanced. So when we hit OK, we're going to reduce our checking account by $23,000 and increase our salary, payroll taxes, and 401k matching expense accounts. And there we go. Very simple. And once you become practiced within it, you can do it in a few moments, have your entire payroll entered into Design Manager with that single journal entry. Now the professional platform has an extra benefit. Under the general ledger frame journal entries, the professional platform has what we call recurring journal entries. So here I can create a recurring journal entry that has all of my payroll information listed for me. Now if this is, if all of my employees are salary, this becomes quite easy, as most of this information wouldn't change. So I could simply select or tag my recurring payroll journal entry, hit choose, and Design Manager brings it onto my new tab. I could then make any changes I needed. Payroll 07A. Oops. 71516, and I'm ready to go. I can then print out a journal for my records, and in Design Manager Professional, we want to post our entries off of our new tab onto our existing tab. So the professional platform with its recurring journal entry feature makes the process even all that much easier. And that brings us to our conclusion on discussing Payroll Entry and Design Manager today. And we saw Design Manager does provide means for generating payroll checks with our payroll system, though it does not calculate the deductions or withholdings. That is still a manual process that needs to be input to Design Manager. Recording payroll from a third-party payroll source is extremely convenient and can be done with the balance of detail in Design Manager. Also, we have all of the outstanding and supporting records from our payroll company. So they contain all of the detail of our journal entry, but we can easily input the fiscal burden upon our company via that one journal entry. And with that, I'd like to thank everyone for joining us on our discussion on Payroll and Design Manager today, and I hope that everyone has a wonderful afternoon and to see you all again in the near future.